watching this candlesticks close. Risk is the high of that candlestick that went completely through the inversion fair value gap. I want to see it now on the news. I want them to use the news to send it lower and attack the sell side that's resting below today's intraday low. See that 10 o'clock news out right now. Took this low out there, and they took it out there. And they didn't even touch the first into the fair value gap at all here. So this is all tantamount to what I was saying earlier and what I posted about. It's trashy conditions. Technicals don't give you that real pristine precision that you're looking for. We have a small little gap inside this inversion fair value gap. So we'll see if that wants to, with the volume bounce here to that candlestick's high. If it's going to go lower, it needs to start really mounting a heaviness campaign, go lower. Any more consolidation in here sends us up into this high. I've lost more money trading after holidays like this than in any other thing. Always holiday volume, always. You know, just based on the fact that we had news at 10 o'clock and we opened up on 9:30 here. We opened, went straight down, and then closed higher on the candlestick. Then we went down, didn't take out this low, but look what it did do. This is what I teach. That consequent encroachment, it closed below it. Usually, but this could be not true today because of the holiday volume, because the holiday occurred on Saturday. Monday's trading can be sloppy price action as it's showing here, just really unruly, not really pristine delivery. But normal procedures is if I see a wick like that and it closes below it, it just warrants the likelihood. It's more likely that it'll come back for that low because we closed below its halfway point. Okay, so that consequent encroachment is a tip-off to me. That's why I like this. And meanwhile, while I'm talking to you, it's failing to go lower. So they're going to come back for those highs right there. Now, because of that, I know I'm possibly wrong, so I'm going to close the trade. Save the stop loss. Reverse and treat this as the initial utilization, which is bullish fair value gap. I think they're going to bump this high. I'll ride it as long as it'll allow me to. And then if it gives the short that sets up a run down to these lows, I'll try to participate in that as well. But these are very, very hard market conditions. Like, they're very difficult. I'm using the candlesticks open here. One tick below it as a stop. And I'm going to try to reach for event horizon between that fair value gap I showed on the 15-minute time frame. That's that midpoint here from the high of it, consequent encroachment, and this old high. So I'm going to look for kind of like a halfway point between these reference points there. So it's fleshed out like this, here to there. So that's a good target right there to reach for. There it is at the level. I'm going to go back a little bit, and there you go. Usually that's bearish, but look what it did. It failed to take out that low. It failed to trade and close below its consequent encroachment of that level there. And I'll show you what I mean. Watch. Take this fib, put it here so you can measure. There. See how it didn't close below it? There's the halfway point, which is indicating that this is not going to be bearish. Why I closed the trade when I was short. I bailed on it, protected the stop loss that would have clearly gotten a larger stop out. And then now this high here, we want to see it use this inversion fair value gap, stay in the upper half. That's this line right here to the high end of it here. So anywhere in here, it's permissible to trade back down to, but it can trade down to and touch the fair value gap there, which is a standard bullish fair value gap. Inversion fair value gap. So it can trade down into that and halfway point of this. But it needs to only do so on a wick, not leave a body laying down there. If it does that and turns into a wick, next candle, if it opens inside anything above this range here to this candlestick's high, it should immediately draw higher. I'm going to take a partial if it goes here. I'm actually going to draw this up to just below the consequent encroachment level. And I'll just prepare myself in the event that it goes to this level. I'll just peel one off, and then I'll take one off and halfway here between that level and that level. And then I'll let the balance run its course. See what it did here? It created as a wick, and we closed above it, and we opened right where I said it should open, above this area. So it needs to really rip and run here. There it is. Now tell me, look at the sensitivity on that level right there. Gann doesn't talk about that. Wyckoff doesn't talk about that. Supply and demand doesn't talk about that. Any other school of thought would never have that level there. It wouldn't be there. Okay, so what it really is this halfway point to its low, half of that, which is the lower quadrant. So right there. Okay, so it's not bad.